Welcome to XM.com. I'm Christina Marucos and you're watching today's Daily Market Comment by Rafi Boyajian. Stocks in China were attempting to break their losing streak on Wednesday following 3 days of carnage triggered by regulatory tightening that targeted domestic tech giants and for-profit education firms. China's blue chip CSI 300 index was in positive territory in late session, but other Asian indices struggled following a lower close on Wall Street yesterday. Regional tech stocks were the worst hit, coming under pressure from yesterday's mini sell-off of America's tech juggernauts. U.S. earnings results continue to confound analysts' expectations, with Apple, Microsoft, and Google all beating their revenue and EPS estimates. However, their stocks ended the day lower prior to the upbeat announcements that came after the market close. Fears about economic and corporate earnings growth peaking already have been dogging Wall Street for a while now, and the recent worsening of the virus picture has only reinforced those views. Health officials in the United States updated their mask guidance on Tuesday, advising all vaccinated people to start wearing masks again in indoor public spaces. The revised guidance was a reminder that even highly vaccinated populations are at risk from the Delta variant, dashing hopes of a quick end to the pandemic. However, there was some good news out of the United States as a closely watched consumer confidence gauge climbed to a 17-month high in July. Nevertheless, all three leading U.S. indices ended Tuesday down. Facebook, Qualcomm, and Boeing are among the highlights of today's earnings schedule. But slightly detracting attention away from earnings today is the FOMC decision that's due at 6 o'clock GMT. The Fed is not expected to deviate from the script today, but Powell may reveal a bit more about how far tapering discussions have come in his press briefing. The odds of a hawkish surprise have diminished after the recent Delta scare, but that makes depressed Treasury yields even more susceptible to upside shocks should Powell demonstrate little concern about rising virus cases. The 10-year Treasury yield edged slightly higher today, helping the greenback recoup some of yesterday's losses. The pound has been benefiting the most from the US dollar's latest retreat, surging past the $138 barrier. Falling UK virus cases could be bolstering sterling because the riskier antibodian pairs have not been able to achieve much of a rebound from last week's lows. This was the Daily Market Comment. Thank you for watching at XM.com.